Welcome everyone to another episode of Daily Live, and Happy New Year. Hopefully everyone had a great holiday. We are a lender licensed in over 20 states with over 200 loan officers that would love to help anyone out there. Scenario on any of the loans we go over today. So if you have a need for a full itemized loan estimate with all of the fees included in the APR, please get with any of our team members. They'd be happy to help you out. And what we do today on this show is we go over our live rates for our standard programs, which we love to help all of our customers out with any type of program. And then we'll do a deep dive into some of our specialty options. So today we're going to be going over 2 to 4 unit multi options. I actually chose just since that's typically the most complicated. And we'll go over some specific examples of an actual home that's listed right now and some options that we could use to purchase that home. So if you have any questions, feel free to drop them in the chat. One of our team members would be happy to, or you can go to our website and get a. Let's go ahead and get started today. So let me switch my screen and we'll pull up the rates here. So the first thing we want to look at is the general market. So there's the last 5 days of the 10-year Treasury. This is typically one of the best, especially as we're talking about lots of different programs. You can track individual programs, but this allows us to see what interest rates are going to be doing across all our different programs. So you see here the last few days, definitely a little bit of an increase, but we always want to put this into perspective. So I always pull out the last year and notice the trend still almost at a 1-year low. So definitely still a great time for everybody out there shopping. Not get discouraged with the day-to-day news of the day. Now let's get into our actual live rates for today. So for all of our standard programs here, we set up a basic scenario so that we can compare scenario across all the different loan programs. So we do a single family home, 500,000 purchase, 300,000 loan amount, 60% loan to value, 760 estimated credit score, FICO credit score, and 40% estimated debt to income ratio. So that allows us to compare all the different loan programs. But as we do every day, we'll go into a deep dive to talk about our 4-unit properties, which we can't show on our live rates page here, or it would get way too much. So first off here, our conventional rates as low as 5.75 today. Final APR comes in at 6.008 there with all the fees included. And if our customer doesn't qualify for an option, typically the next option we want to explore is an FHA option. So FHA allows more leniency on credit issues and a higher overall debt to income ratio, and does require mortgage insurance. So notice here the rates are coming in at 5.125, much lower, but when you include all the fees and the insurance, the final APR comes in at 6.023, just a touch above. Pretty typical here. So it's a little bit more expensive for FHA comparing to conventional. And our next option here are VA options for our eligible service members. If you are VA eligible, these are amazing programs. Rates come in today low as 5.25, and with all the fees included, they have. So notice there are much less fees and costs, no mortgage insurance, etc. for our VA eligible borrowers. So our APR of 5.5 beats FHA, typically the best option for our eligible borrowers. And the next option here on our rates page are USDA options. Those are for properties and USDA properties eligible, and our borrower's income is eligible. These are great options to consider. USDA 30-year coming in today, 5.125 rate, the cost included, 5.779. So we'll typically compare that with FHA or conventional in the same area. You see typically USDA may be the best option for our borrower, which are in most scenarios. And now we start getting into our unique options, which we'll talk about more today as well. So QM is our options that are FHA, VA, USDA. These are non-standard, non-government backed mortgages. And these are all options where we can use alternative docs such as bank statements, 1099s, etc., which really help ours many times if they don't qualify for conventional FHA, many times because their tax may not account for all of the income for when we use bank statements, etc. We can use those alternative docs to qualify under this program. So our standard option for a primary home comes in today at final APR 6.272. So just a touch higher than conventional there to switch to our alternative doc options. We can use alternative docs under our non-QM programs as well. Rates today come in at 6.125. Final APR 6.448. We'll compare that to our conventional options for an investment property. 125, same rate. Final APR 6.438, just a touch lower on the overall fees there for conventional options, but very comparable. And our option we want to always highlight here are DSCR options. These are very different because they require no income or employment information. We're simply going to use the estimated rents from the rental property. DSCR ratio, the rents can cover the expenses, aka the property cash flows monthly. That's a ratio of 1 or higher, which is what we use. And 3-year prepayment penalty these programs. So that's the first option we show here. Rates coming in today, 5.999. Final APR 6.222. And we can even add a 5-year prepayment penalty over here. With a 5-year prepayment penalty, DSCR comes in at 5.999 rate, same rate, but a little bit lower cost here. You see the APR 6.186. And prepayment penalty, some states do not allow it. Some investors don't want a prepayment penalty. No problem. We have those options, rates as low as 6.125. Final APR 6.448, very comparable to our conventional options. And we have dozens of other programs here on the page. We're not through those all today. Let's get into our top. Since we can't show our multi-units, 2, 3, 4 unit options here across all the different programs on the live rate, we want to make sure we pull up a scenario. So to an actual property here in my area that is for sale. This is an actual quadruplex, so 4-unit property. So there are a couple. If our borrower wants to use this as their primary home, occupy 1 unit, and use the rents from the other 3 units that are going to be rented out, we can do that under a few. And we'll also explore how we could purchase this as an investment property. We're really going to explore the high-end LTVs. What's the lowest down payment we could do on an scenario to purchase this pretty standard quadruplex here. So our first option, using a conventional loan program, these options allow us to do a 4-unit purchase with as low as 5% down, and this is for this specific home that we just looked at before. So here are there's a little bit of a hit here or increase in price compared to a 1-unit property, but very amazing options here still available. 5.875 rate coming in at 2.5 discount points of cost, and we can go all the way up to 6.62 to get some lender credits. That lender credit to put towards our closing costs. So you can see here, this is the exact scenario where we're only able having to put 5% down, which is pretty amazing, to occupy 1 unit and use those other 3 units as rental income. And you can see here the rest of the scenario, what we set up. Remember, we use that 760 estimated credit score to make sure the maximum amount. Now, another thing to consider is that normally this would be over the conventional limit. Notice our loan amount of $945,000 is much typical single unit property conventional limit of $830,000 and change, I believe, this year. But when we do multiple units, we can exceed those limits, much higher limits for a 4-unit property. So we can still use it as a conventional option. Now, if we're going to occupy this as a primary home, we always want to compare it. FHA actually allows us to put as low as 3.5% down for the standard FHA program, which for a multi-unit property could make a big difference, because if you're only occupying 1 unit, renting another 3, paying a much higher price than you would for a single unit home. So this is very helpful for our primary borrowers or our house hackers that are trying to get their first into investment. This is a great option to get a multi-unit property, occupy 1 unit as a primary home, 1 unit for the amount of time you must live in it, and then you can, of course, rent it out once you have used that as your primary home for the minimum amount of years. The one thing to consider here is a little bit of a catch here. You have to make sure that if you do move out, that all 4 units would cover the expenses. So the rent from all 4 units must be full payment in order to qualify for a 4-unit option. So a couple little caveats, but pretty amazing. FHA 4-unit comes in a 5.25 rate, costing 2.253 distance and costs. And we can bump that up to a 6% rate to get some more lender credits here. A 6% rate affords 0.556 or in lender credits towards closing costs. Pretty amazing there. And you see here we are only putting 3.5% down payment. So pretty amazing. The mortgage insurance that we talk about as well. So definitely something to consider there. And now our investment property option. So one of our favorite options here, as I always say, our DSCR, definitely preferred by most investors here. So let's go into our second most program for a 4-unit property, which would be our DSCR, no income or employment needed. We're simply going to use the estimated rents, and you see able to get 15% down debt loan to value, and we added a 5-year prepayment penalty in order to show the best rate options here. So this is our preferred option for investors. Pretty amazing. The rental income, nothing else needed there as far as income, and we can get some pretty amazing options. Lowest rate option at this very high, put more down payment. The rates will be much less, but this is pretty amazing. 7.25 rate, costing 3.25 discount points and costs. And we have an par or no cost at 8.625 rate. So if our investors are out there looking to put low down payments, these are amazing to do the DSCR program. This typically past few months even wasn't even allowed to use a DSCR program for a 4-unit property up to 5% LTV, but now we have different options to do that. So pretty amazing here. Let's put just $149,000, $149,000 down on a $1 million 4-unit property. That 85% LTV program, pretty amazing. And if we have an investor that does have income and wants to use income, the next option typically look at, the next requested option from our investors, typically a non-QM option, such as our bank statement option. So with this option in this example, I use, so we can still use the 4-unit income as rent, but if we need to add more income to the deal, this isn't a DSCR loan where the DSCR ratio doesn't meet the minimum. In this case, we're adding some bank statement income, standard income from our self-employed borrower in this case, and we're still able to achieve 15%, a little bit better pricing. And we did add a 5-year prepayment penalty in this example in order to get the best options. You see here, we can get 15% down, 85%, much better rates if we add some income to the deal. So now we are looking at rates of 6.999, costing 3.375 discount points and costs. And we even have an option here at par for 8.375 rate for no discount points and costs. So these are definitely a little bit better options. Does want to add some income, has income available, no problem. That definitely makes it a better deal here. Scenario and most scenarios, especially at the high of the most common options that are sent to our customers that request a 4-unit property. So I went through these 4 options. If they're looking at it as a primary, typically we're going to compare conventional and FHA, which we went over a minute ago. And typically if it's an investment property, our investor typically want to do the easiest option, which is DSCR, or they want a little bit better pricing. They would typically add some bank statement or similar income. So those are the 4 different ways, most common. There's a million ways to approach it, a million different, but those are the most common that I wanted to go over today as we discuss the multi-family options. So of course there are going to pricing and little tweaks if we're doing a 2-unit, 3-unit property, but we want to take it to the maximum there, 4 units, and see the maximum LTVs that we can gain in properties. So I don't see any questions. If you have any questions, please get with one of our team members. Again, we have over 200 licensed loan officers. We're licensed in over 20 states, so we'd be happy. Please drop a comment or just visit our website, mortgagecalculator.com, and we would be happy to help you out. So thanks everyone for joining us today. We'll be back next week with examples for Daily Rates Live. Hope everybody has a great new year.